It's November 16th, and it looks like the stock market is taking a pause on this 3-week rally we're in. The S&P index is down about 0.14%. Not too bad, especially since it's had a run up of over 10% to this point if you start 3 weeks ago. The NASDAQ, again, is close to being flat. It's just down 0.16%. The Russell 2000 really went down 1.64. So if you look at small stocks today, they've really taken a hit. So you're seeing that in smaller cap stocks and smaller companies are really going down quite a bit today. The VIX, and I'm going to take a closer look at the VIX to kind of examine it and how it's behaved over the last 3 weeks. What is the VIX? It's the volatility index. It tells you how volatile the market is. And it usually, when the VIX is up, it's usually when the stock market's down. When the stock market is up on price, the VIX goes down. So I'd like to take a closer look at the VIX and show you what's going on there. So here's the VIX, and it's really gone from the very beginning of 2022 up until now. And you could see that in the late July timeframe, I began to see a sell-off right around here, and you could see the VIX really take off, and it kept going up for about 3 months, but it has really gone down. And I think it's really showing that this rally we're in for 3 weeks, it's, the VIX is showing a consistent pattern with stock prices are going up. Investors are more comfortable, they're more confident in buying into stocks. So let's take a look at where interest rates are at. So looking at the bond market this week, which dictates interest rates, it's interesting because the 10-year today is down about 9 basis points, which is a pretty good move, but it went up about the same amount yesterday. So we're probably even over the last 2 days. But on Tuesday, this went down substantially, and we had that big, rally on Tuesday. Whenever interest rates go down, it's good news for stocks. Stocks are going to go up in price because the valuation, the discount rate we use on a stock is going to be lower, and it's going to drive a higher valuation. So overall, lower interest rates is good news for stocks. If it continues to go down, it'll be really good news long term for stocks. So today's pause in the rally, it's fine. I think it could use a breather, kind of let buyers and sellers of stocks kind of regather themselves and make a decision a little more long term. We are on a really nice rally in the S&P. Over the last 3 weeks, we are up 9.22%, which is excellent. Over the year, we are up 17.6% on the S&P. Very good year. And I think the rally has more room to go. And the reason I say that is that there's not a lot of news that's coming up. I think the Federal Reserve is going to take the rest of the year off and probably begin to comment, probably in the February timeframe, and we'll see what they have to say. I'm expecting that interest rates are going to stay where they're at for a while. I don't think there's a lot of economic data ahead. We'll be eager to understand how the holiday season is going to go, but we're going to hear that data at the earliest would be in late December or in January, when we begin to understand how much consumers are spending this holiday season. Overall, I think it's a really good place to be. It's good to have stocks go up in the green. For the last 3 weeks, it's been fun to see some companies, especially small cap companies, really rally and pick up value in their shares. But at this point here, we'll see if it keeps rallying up or if it's going to take a pause, maybe trade sideways for a week or so. I hope you enjoyed the update on the market. Good luck investing out there.